Well, greetings and salutations, test takers. This is Dean Tenney coming to you my studio in fabulous Las Vegas. A shout out to Jordan and the Mometrics team. Recently, Jordan sent me a preview of the fourth edition of Mometrics SIE study guide, which includes three practice finals, and asked me to do a review for them. And I said, certainly. And they've given us permission as part of that process to give you a free look on some of their content. We earlier in the third edition had explicated their SIE practice test one. So this is SIE practice test two. We'll give this a grade when we're done of above average, average, or below average as part of that review process. But for us, remember, the idea is to expose you to questions and why right answers are right, why wrong answers are wrong is part of the explication process. So what you want to do is hit pause, come up with your answer, hit play, see how your answer compares to mine, and we'll see how we do at the end of the exam. All right, well, let's get busy. Number one, within how many days must a member firm report to FINRA if a member or an associated person of the member is subject to a written customer complaint involving allegations of theft or misappropriation of funds? I don't really like this because I think it can confuse you about quarterly and immediate. But anyways, the answer here, let me see my annotation tool, is going to be D, 30 calendar days. And all right, number two. Now, number two is high probability. Number two is high probability. Correspondence means any written communication that is distributed to 25 or fewer retail investors within a 30-day period. Very much a test issue. So the answer is C. What is the dollar amount of any gift from or to another member associated with a member may not exceed in 1 year? Again, very testable. So far, I like this. I wasn't a big fan of question one, number one, but question number two, question number three are very, very testable. Now, remember that $100 gift or gratuity rule does not apply to uh, expenses and things that are in the normal course of business. It doesn't count reminder advertising. Number four. Well, let's see if I can roll this up a little bit so we can get more than one question to a slide here. Number four, a registered rep trading an equity based on non-public information, ooh, in his or her own account before trading for the customers. Well, they're not asking here. You don't have a choice as a violation of the Insider Trading Act of 1988. So trading ahead of customers is a no-no, regardless of whether it's got two no-nos here, right? You don't trade ahead of customers. That's called front running. Here, it's compounded by the fact that you're using material non-public information, but you don't have a question about insider trading. So that would be D. You should definitely know what A is. Churning or trades that are excessive in size and frequency. Should definitely know that on your SIE exam. I wouldn't worry about rebalancing until you take your 65 or 66, and I wouldn't worry about market timing at all. Which of the following items regarding SIPC? SIPC is very testable. The Securities Investor Protection Corporation. Regarding SIPC, must member firms advise all new customers of in writing when opening a new account? So the SIPC website address, absolutely. SIPC telephone number, absolutely. How to obtain the SIPC brochure, yeah, one, two, and three. You should also know the coverage, $500,000, of which no more than 250 can be cash. And you should definitely know that covers per separate customer. Accounts, every account that has different beneficial ownership. Number six. Which of the following terms refers to printed or processed analysis covering individual companies or industries? That sounds like a research report. I wouldn't really worry about this one as a test issue. And again, boom. 7, when using testimonials, which of the following points does not need to be clearly stated in the body copy of the material? The testimonial may not be representative of the experience of the clients. Now, you got to be careful on these does not need or accept. A most certainly does, and we're looking for something that does not. B, the fact that this paid testimony is a nominal sum. Nominal means it's not meaningful. That's what the word nominal means. If the testimonial concerns, so let's put a question mark next to that one. If the testimonial concerns a technical aspect of investing, the person making the testimonial must have adequate information, knowledge, and experience to form a valid opinion. That sounds reasonable, right? In other words, we got to tell you whether or not this is somebody who has any expertise in what's being discussed. The testimonial cannot be indicative. Oh, that's an easy one. So by process of elimination, it looks like our answer is B. Registered investment advisors are registered through. I don't particularly care for this, but you don't get a choice of a state administrator. So, we're either going to register with the state or the SEC. We only have the SEC as a viable alternative here. And you'll find out a lot more about that. I know you're excited when you take your NASA exam about whether this investment advisor is going to register with the SEC or the state. Some of you have in your future another exam, 63, 65, or 66. I would know FINRA is the self-regulatory organization for the securities industry. I would know the Municipal Securities Rulemaking Board publishes rules, doesn't have any enforcement power, and I know the New York is another SRO. So one that's missing here is a state administrator. 9, prior to the options disclosure document being delivered, a registered rep may do which of the following? Solicit a sale of an options contract? Absolutely not. This is supposed to be given to you at or prior. It's all the bad stuff that can happen to you in the options arena. B, place an option trade for the client account as long as it's sent the same day. Place an option trade and limit discussions. Yeah. General information. Say, hey, I'm going to get this out to you. Now, it's very testable to know that open the option account. I'm going to give you this disclosure document. Then I'm going to get my registered option principal to approve the account. Then we can do the first trade. And then you have 15 days to get back to me the option agreement that you read and understood the options disclosure document. If it's not back in time, then we're going to only allow you to do closing transactions. Closing transactions. Number 10. A municipal security advertisement that concerns the facilities, services, or skills with respect to municipal securities of such broker-dealer or municipal securities dealer or another broker-dealer or municipal wow, is the definition of product advertisement. No, I don't think there's anything here about muni bonds. It sounds like it's about our firm, right? So professional advertisement, new issue, no municipal. I think, yeah, A seems like the best answer there about our firm, right? It's about the people, not the product. This one's a poor one, so what's that? We have 1 in 10 so far that we think or I think are not reflective or of what you're going to see on the exam, but the others have been pretty good. So we'll continue on. Remember, the whole point here is a review and give us an opportunity to talk about things that you should or should not know for your SIE. A member firm may not publish a research report regarding a subject company for which the member acted as a manager or co-manager of the IPO for how many days following co-manager for the IPO, how many following the date. Don't like this one because, again, this is more of a 7 or 24 question. This is about nobody's going to read the research report, or excuse me, the prospectus if we give them a research report. So we're not allowed to publish research on companies we're taking public. So in this scenario, it's going to be 40 days. It could be 90, could be 0, just depends. Again, I don't think that's a very good question for the SIE. Which of the following is true of third-party research? A third-party research report produced by a person in the research department of the firm. No, third-party would mean it's not our firm doing it. It's somebody else. B, third-party research reports and independent third-party have the same meaning. They do not. I'm not supposed to misrepresent something being my own product versus something I paid for. C, a registered principal or supervisory Analysts must approve all 30 third-party research. No. Let's see what our D choice is. A registered principal must supervisory analyst must approval registered principal or super must approve. Looks like a typo. Well, as part of me doing the review, this is going to be released in a month or so. Let me make a note to tell our friend Jordan that I think there's a typo there, grammar wise. A registered principal or supervisory analyst must approval. I think must approve would be the proper thing. Anyways, the answer here is C. A registered principal must approve all third-party research before it's distributed by the member firm. So in other words, just that we don't want our reps sending out research that they think is okay that has not specifically been authorized to be sent by the firm. So 12 is C. Again, we've got 3 questions here that I don't really think are a big deal in the SIE. So hopefully we'll get back on track with some high probability questions that you could expect on your SIE exam. All right, which of the following accounts is not covered by FDIC? You should definitely know that FDIC is for bank accounts, not securities accounts. And so I like this one. So I just was saying, let's get back on track. And I would know that FDIC is for banks and SIPC is for brokerage firms. So the answer there is B, right? Please note, it doesn't say bank money market mutual fund. It says bank account. So the answer to 13 is B. I just told you what is the limit. Ooh, be careful. Not a SIPC of FDIC per deposit per insured bank for each account ownership category. That is very much a test question, and that's 250. Remember, SIPC is 500,000, of which no more than 250 can be cash. FDIC is 250 grand. What is the maximum amount that may be gifted within one calendar year to avoid taxation? The answer is for 2023, $17,000. I don't think you're going to see this on the account of the test because they don't like to have to change numbers all the time. So, they avoid it. They just give you big picture stuff. So I think very low probability you'll see anything about that. 16. I like 16. I mean, a lot of your SIE exam is definitional, recognition kind of questions. So a blank refers to when a company first sells its shares to the public. That's called an initial public offering. And you should definitely know that's an IPO. So the answer is A. Let me get on my. The SEC was created under 34. So we got some aim and shoot point and click questions I would definitely know. So 33 is the prospectus or paper act. 34 is people and places. What I mean by that is sometimes you can get questions right by covering up the screen. Are they asking about people and places? 34 created the SEC. 34, or are they asking about prospectuses in terms of registering securities, IPOs? So the answer is B. The Investment Company Act of 1940 is for mutual funds. The Investment Advisor Act of 1940 is whether you're going to give investment advice and charge fees for it. 18, which of the following financial information is not required on the new account application? Liabilities is not required. We do want to determine suitability, and a big part of suitability is going to be your net worth. And remember, net worth would include the liabilities, right? Because net worth is assets minus liabilities. Your annual income, we're really concerned with annual income because remember, we want to be know whether we can invite you to participate in a Reg D private placement. And for that, you need to have an annual income of 200,000 for the last 2 years with the expectation of 200,000 this year, or married and filing jointly 300,000, or you need to have $1 million net worth exclusive of your primary residence. So B and D, very testable. And I would definitely know the definition of an accredited investor for your SIE exam. That is definitely high risk, high probability you're going to get asked about that. 19, the length of time that a investor plans to keep an investment is known as, so be careful what you're being asked here. The length of time that they plan to keep the investment is known as. You can't do holding period unless you know that we've concluded the investment. So given this answer set, our best answer is time horizon. And that's very important in determining suitability. So B. Let's see if I can go down one here and get some more stuff onto the slide. I try to make it as big as possible because I know that some of you may be taking this or watching it on a phone or a smaller device. So I try and blow up the screen as much as I can. But I think that's about a better size there. That'll give us an opportunity to get three done on a screen. Which of the following investments would not be appropriate for an investor with a capital growth objective? Eh, I should know that common stock is and growth mutual fund is. And now I got a 50-50 between the UIT and the zero coupon bond. I'm going to go with the zero coupon bond because that's a debt instrument. We don't think of debt instruments as providing us with capital growth. So I'm going to go for D. And then A, it would depend on what we actually put into the unit investment trust. So the answer to 20 is D. By the way, I'll see when I'm done if I've missed any. If I have, I'll circle back and I'll provide an answer key in the video description for you. Investing in multiple investment vehicles within a portfolio to reduce risk or increase returns, you should definitely know that this is called diversification. That's huge. It's a way to avoid selection risk, that very testable. Yeah, it's a way to avoid what we call non-systematic risk or non-systemic risk, very testable. You should know what dollar cost averaging is. Dollar cost averaging is not the answer, but that's fixed dollars invested regularly. So 21C. You should know the easiest way for a retail investor to diversify is in the context of a mutual fund. 22. Blank risk refers to the impact. Now, I noticed this Mometrics, they like to do the blank format. So that's not really a format you're going to encounter on the test. But, yeah, again, it's more about, having some more practice questions than it is about, how closely it approximates the format of your SIE exam. Blank risk refers to the impact. Now, what I like, though, is a vast majority of your SIE is definition recognition questions. So that part, I find this to be very appropriate. Anyways, impact of bad management decisions and other internal missteps or external situations can have on a company's performance and the value of the investments in that company. Yeah, that's the risk of management, right? The answer is D. PS, remember, you can avoid that through diversification, right? By more than one company, more than one company. Under Reg T, what is the maximum total purchase price for new purchases? I do like this question. Total purchase price of stock for new purchases that a firm can lend to the customer. Boy, a lot of wording there, but remember the customer under Reg T has to initially be at risk for 50%. Now be real careful, RTFQ, read the full question. If I focused on the new and thought it was about not the customer making a new purchase, but a new issue, I could easily miss this with 100% because we don't lend you money to buy new issues. But it's not about a new issue, it's about a new purchase, kind of tricky. 25% would be maintenance on the long. And I told you D would be if it was a new issue or an option, you'd have to pay in full. How often must firms notify employees of their business continuity plan or discovery recovery plans? Annually. I think that's, again, not a really great practice question. I would know that business continuity plans, there has to be a link on the firm's website where either you hit the link and it gives you the business continuity plan or it tells you how to get one as a customer if you would like it. 25, which of the following investments would be most suitable for an investor in a high tax bracket? Very testable. Who wants to avoid paying any taxes on his investments? Very, very testable. I can't imagine any draw of the exam. I'm wishing for you a dream draw. Everything you studied shows up. And you say, I don't know what the big deal is. But you got to be prepared for a face of death draw. And you can't be giving up aim and shoot, point and click questions on things I tell you are there. Angels weep for you. That is very much a test question. 26. What is margin in a brokerage account? The difference between the purchase price and the current value? No. That would be called mark to market. The difference between the beginning value, the current value, the entire account? No. Borrowed money used to purchase securities? Yeah. You should definitely know there's additional documentation to open the margin account, right? So the answer to 26 is C. At what age does an UTMA account terminate? Very, very testable. You should know that if it's an UGMA, Uniform Transfer to Minors Act, it would be Uniform Gift to Minors Act, it would be 18 or 21, depending on the state. But if it's an UTMA, you can stipulate up to the age of 25. I'll make a note on this one. I don't really like this one because it says 21, but you can stipulate up to the age of 25. So given that, I know it's not 20, I know it's not 19. So I'm going to go for 21. I'll make a note for our friend Jordan. This is a question that I don't really think is a great question. So I'm going to go for D on that one. It's because I don't have it stipulate up to the age of 25. You should definitely know in UTMA accounts, it's the kid's tax ID number, one minor, one custodian per account, no margin, very testable on the UTMA account. 28. Blank trading authority is when a person other than the account holder may invest without consulting the account holder about the price, amount, or type of security. So let's see, price, amount, or type of the security that are placed for the account. You should definitely know it's called a discretionary account. If I'm going to make a decision about action, asset, or amount, I'm going to need to have a discretionary authority. I don't need discretionary authority for time and price, but this says amount. Since it says amount and type of security, it's discretionary. Which of the following would be a red flag when opening an account for a new customer? No investment experience. Well, everybody's got to start somewhere. No. High annual income, but little or no savings. Hesitant to give financial information. Nervous and anxious when answering questions about the objectives of the account. I don't particularly like this question, but given the answer set, D, I think, is the most appropriate answer. Dividing a larger transaction into smaller transactions. Ooh. Devoid triggering either the CTR or the SAR is called structuring. I would definitely know that. You are going to get tested on anti-money laundering, and you should definitely know structuring. You should also know about CTRs, 10,000, SARs, 5,000. SARs are for commercial logical. You should definitely be able to recognize the stages of money laundering, placement, layering, integration. And you should definitely know that we have to have an AML officer. All right, so let's see. Which of the following persons are considered corporate insiders? Sometimes we refer to them as control persons. So, be prepared to hear that language as corporate insiders and control persons, officers, directors, and employees. Absolutely. And there's going to be, rules for those kind of folks. The other one you should be aware of is principal stockholders. So the answer is all of the above. Systematic risk. I told you about systematic risk by telling you about non-systematic risk, selection risk. Systematic risk is the tendency of securities prices to move together. Here risk prevails despite your diversification, and the answer is A. Credit risk would be associated with bonds defaulting, and that would be based on their credit quality, which would be determined by credit rating, and we should know that less than BBB is less than investment grade. Liquidity risk is your ability to get out of the investment. I would definitely know you have that in a partnership. Can't get in or out without permission of the GP. Interest rate risk is associated with bonds. If interest rates go up, bond prices go down. By the way, that would be a good miss, but given that A and D, A is the better answer. What type of risk involves the chance that Congress will change the rules on you? Again, I like that as legislative risk, but given that legislative risk is tax risk, right? Because Congress is in charge, Congress and President, of what we call very testable fiscal policy. That's government spending and taxation. So you should definitely know that. You're going to get some economics questions. I haven't seen any economics questions yet on this one. 34. Which of the following terms is a maneuver used by a company that increases the number of shares by exchanging a specified number of new shares for each outstanding shares? That's called a stock split. You should definitely be prepared to do a calculation. You're not going to do much math on the test, but I would be prepared to be able to do a calculation of a stock split. You know, customer owns 100 shares and there's a 3-for-1 stock split. How many shares does the customer have now? I definitely know that there's no tax consequence to receiving the additional stock. You just have to adjust your cost basis. I told you that 35 is very testable. Investing a fixed dollar in a security at fixed intervals is known as dollar cost averaging, very testable. And we end up with a lower average cost than those of the underlying shares. That too is very testable, doesn't guarantee a profit. What is the name of a strategy where a company reduces the number? I like this, 34 and 36. So 34 says we end up with more shares. 36 says we end up with less shares. And that's called a reverse split. Again, no change in proportion ownership. And you're going to have less shares at a higher price. Sometimes that trick will work. You don't have to do the math. If you just know that in a regular forward split 34, you end up with more shares at a lower price. And in a reverse split, you end up with less shares at a higher price. Embarrassing. Well, as we said, you might actually have to do some calculation on this. And so here's 37. It says a company declares a 1-for-2 reverse split. So remember, in a reverse split, I end up with less shares. So as I told you, what I would do as a test taker is say, okay, I need something less than 200, right? If I was a forward split, I'd need something more. By just knowing that I'm going to have less shares at a higher price, I know the answer is A. So let me get out my annotation tool. Now, I should tell you, I'm one of the few people that I guess thinks that test taking tricks like that are worthwhile. Some people don't believe that. An intangible asset that is the result of the acquisition of one company for another. This is a terrible question. I don't think you're going to see this at all on the test. It's called goodwill. 39. I always get people telling me that they end up having more questions on preferred stock than they were counting on. I'm not sure what that means, but you definitely get questions on preferred stock. You have preferential treatment. That's why it's called preferred stock, and dividends and liquidation. And dividends in liquidation. So you have a prior claim on the income and assets of the firm. You have fixed dividends. You should definitely not be struggling with fixed dividends. So you know you need Roman numeral 2, right? Because you're not getting more than the fixed or stated amount, like a 5% preferred, for example. That 5% is based on par, and you're not getting more. You might get less, but you're not getting more. So I need 2 for sure. So that means I can eliminate B. Not very helpful. It's issued as an alternative to debt. Well, like debt, it is a fixed income investment vehicle. It has an effect on EPS. Now, I think this is way in the weeds as compared to what you're going to get on the test. But the answer is 1, 2, and 3. Now, what I think you need to know about preferred stock, again, is it's senior to the common stock and dividends and liquidation, and it's a fixed income investment vehicle. Dollar denominated negotiable receipts for a company stock of a foreign company held in trust in the foreign branch of a U.S. bank, very testable. ADRs. I think the language here is a little convoluted, but that is definitely on the exam, high risk, high probability. It's an ADR. The way they say it on the actual exam is which of the following best describes a foreign security traded in domestic market? Why would you do this? To have different correlation with your U.S. investments? And you should definitely know you have foreign currency risk. 41, assuming irrational market behavior rational, what should be the opening price of ABC on December 6th? So what they're getting at here is the X date. The first date on which the stock no longer trades with the dividend attached. You should definitely know that X date is one business day prior to record. And let's look at it. Monday, December 5th, after trading for the day ceased, ABC declared a dividend. Who cares? That's the payable date. We don't care about that. It would pay an anticipated 25 cents. So right now, that 25 cents is in the corporate shell, but we're going to distribute that to the owners, the shareholders. Payable on December 15th. We don't care about that. The December 5th closing price of ABC is 25.34. 25.34. So I'm just going back here. Declared it would pay on the payable date. I'm just looking to see where the record date is in this question. So yeah, I think we're going to have another issue here. Well, that's part of the review questions, right? I want to make a note to tell Jordan about question 41. Remember, this is pre-release, this fourth edition, and they've asked me to review it, and this is part of the review process. So, what should the opening price be on December 6th? I'm assuming that they want us to think that that's the X date, even though it doesn't say anything about that what the record date was. If that's the case, we would adjust that by that 25 cents, right? And the stock should go down by the amount of the dividend. Oh, this is crazy. Anyways, we'll just sign that to the universe. Stocks with dividends are a little more valuable. So there's nothing that says it's going to go up. So I'm going to say, well, maybe it becomes more valuable and goes up. But 41 is problematic. All right, well, onward and upward. Like I said, we don't want to get bogged down in questions. What you are going to see, as I mentioned, is the X date. So again, I'm not a big fan of that question. An investor owns 200 shares, which is currently trading at 25, and will be receiving a 20% stock dividend. What will the investor receive on the payment day? You should definitely know this. So I'm going to take my 200 shares, my calculator, and I'm going to times it by 20%, and I should get 40 additional shares. I would be prepared to do that. And then remember, the point is that's not taxable. I just have just my cost base per share. There's been no change in my proportion ownership because I have 20% more shares. So does everybody else. How long must an investor hold an investment to be considered long-term? Very testable. You have to be at risk for more than a year. So more than a year would be 1 year and 1 day. What represents the amount of the stockholders' capital of the firm? That's called equity, shareholder equity. I would know the classical balance sheet equation, which is assets minus liabilities equals net worth or equity or shareholder equity. 45. By the way, I know that I'm talking pretty fast, which I do anyways, but I'm going pretty fast because I'm trying to bring in these explications in at a reasonable time frame. But you can remember, the YouTube will allow you to speed this up or slow it down, whatever the case may be that you need. What financial statement provides a summary of the firm's cash flow and other events that cause changes in the cash position? I would have a general understanding of the financial statements, and the financial statements are a balance sheet, an income statement, and a statement of cash flow. And cash flow is kind of hard to fake because that's the money that comes in and out of the business. So that one is hard to fake. So the answer is C. Again, low probability. What is the graph called? The graph called that represents the relationship of a bond's term to maturity and its yield at a given point in time. The relationship of a bond's term maturity and its yield at any given term. I don't like that, but yield curve is our only answer there that has any kind of makes any sense. I would be looking for something like yield to maturity or something like that. Yield curve would primarily be used in the context of economics. And I even then think would be low probability for you. 47. Which of the following would most likely be passively managed? That is very much a test question. So you need to know an index fund. So if a customer says, Dean, I just want to have the lowest cost structure possible. I'm willing to accept a market-based return. I think active management just is a waste of time and energy. By the way, whether the customer knows it or not, what he's articulating is the efficient market hypothesis. An account in which customers with large portfolios pay a brokerage firm a flat annual fee that covers the cost of the money manager services and the cost of commissions is a wrap account. A lot of you are going to be taking a 766 or 66365. And the main reason you'll be taking the 6365 or the 66 is because you want to offer customers at your brokerage firm a wrap account. Current ratio, you won't get much balance sheet stuff. You're definitely going to get current ratio on the other exams, on 7 and on 65, 66. But the current ratio is the current assets, 280,000, divided by the current liabilities, 85,000. So we take the current assets, 280, we divide by 85,000, we get choice B. Book value, I think you just need to know, is the theoretical liquidation value of the business and be able to contrast it with market value, supply and demand, and par value, which is $100 per preferred stocks and 1,000 for bonds. But to actually do this, what I would do is back out from the book value the stockholder equity, which is $170,000. I'd back out the preferred stock dividends and divide. Again, I think this is outrageous as a potential SIE question. And I even think it's outrageous in terms of 7 or 65, 66. Which of the following is the over-the-counter market? I would definitely know NASDAQ is an over-the-counter market. Well, now, the other thing to know about that is NASDAQ stands for the National Association of Securities Dealers Automated Quotation System. And over-the-counter markets can best be characterized as negotiated, quote-driven markets. That's very testable. The New York Stock Exchange can best be characterized, very testable, as an auction order-driven market. An auction order-driven market. Which of the following is an example of a limit order? Limit order is where a customer says he wants to buy the stock at his price or better. So I kind of like this question, and particularly the answer sets. A is a market order. A is a market order. You want immediate execution, best available price. That would be very much a test question. Here, it's the wrong answer, but I'm telling you, it very well could have been the right answer in different situations. In order to sell 100 shares of XYZ, if the stock drops through 45, no, that's a stop order. That's a stop order. In order to buy, that's another market order, best available price. Yeah, you want to buy it for 40 or less. There's an implied or better. You should know that buy limit has to be placed below the current market price. Below the current market price. Which of the following is not required on an order ticket? But we definitely need to have the account number. We definitely need to know the order type, but we need to know the ticker. So the customer's name is not on the order ticket. That would be on the confirm, but not the order ticket. And again, I don't really think that's a big deal in terms of the test. A stock trade definitely should know settlement. You should definitely know, very testable, that regular way settlement for corporate and municipal securities is T plus 2. You should definitely know that regular way settlement for option contracts and U.S. government securities is T plus 1. So this is a stock trade on January 2nd. So 2 business days, Saturday 3rd and Sunday the 4th, are not business days. So January 5th would be T plus 1, and Tuesday, January 6th, would be T plus 2. And so the answer is B. I don't think they'll make you do practical application of that, but I do think you should know, recognition T plus 1 versus T plus 2. 55, again, I told you they don't really like to put the numbers in there because they change, but we are doing the pre-release of their 4th edition of Mometrix, and it looks like that probably was the major reason for the update, is to update it for 2023 in terms of things that have changed since the 3rd edition. So that looks like to me to be the biggest difference so far that I've noticed between their 3rd edition and this, their 4th edition. What is the maximum annual contribution to a Coverdell? Now, I wouldn't worry about this as a test question. The answer is B. What I would know is I would be able to do is contrast a 529 with a Coverdale. So, I wouldn't worry about this $2,000, but I would be able to contrast Coverdales to 529s and know that in that comparison, the 529s, why they're better, more flexible than is a Coverdale. 57. What is the tax consequent to an individual over the age of 59 and a half who withdraws a lump sum from their 401k? So you should know that in all retirement plans, when you withdraw, it's going to be taxed at ordinary income. And it says here they're over 59 and a half, so there's no 10% penalty here. By the way, this doesn't matter if it's a 401k or, IRA, whatever the case may be. And so it looks like A is going to be the right answer here. My whoop. A. How are capital gains and losses inside an IRA? Well, with inside a retirement plan, there is no tax consequence to your gains or losses. I used to have clients and I'd say, listen, the two major impediments to investment success are inflation and taxation. And in your retirement plan, you've already beat taxation. So if we can beat inflation, we're getting ahead. So, that's a pure investment arena within that. $61, 59. An individual converts his $100,000 traditional IRA to a Roth IRA just before a major market decline causes the value to drop to 50,000. The investor should blank the Roth IRA back to a traditional to avoid paying taxes on the 50,000. Yeah, I don't think you're going to see anything like this on the test, but the answer is C. So again, I'm not sure how Mometrics, they do all kinds of practice exams for all kinds of things. I'm not sure how they are conducting debrief or, what they think is on the test and, that kind of thing. So, my debrief when I'm having these conversations with you based on helping hundreds of thousands of people pass the test. So an option that's written against stock don't, I would definitely know is a covered call. And you do that to generate additional income. Now in your SIE, you're not going to get, if you tell me you missed because of options, I would say I don't believe it. There are only 3 or 4 option questions on the SIE. I would tell you though, you want to lay the groundwork because when you go on to take, if you're taking a 6, who cares? But if you're going to take a 7, then options become a much, much bigger deal. All right, 61. How are losses on options treated for tax purposes? I just had somebody ask me this the other day. They're treated as short-term gains or losses. I think it's more of a 7 question, but they're all short-term. And the guy who was taking a 7 yesterday, they should definitely have known that. Again, I don't think it's a big deal for you taking an SIE, but which of the statements regarding REITs? REITs are like mutual funds, except instead of a diversified portfolio of securities, it's a diversified portfolio of real estate investments. They're professionally managed, absolutely. Allow smaller investors, absolutely. The returns can be very volatile. It's tied to the real estate. If I take an A and B, I got to take D, right? Because I can't take either one of them by themselves. I would know they have a pass through of the net investment income like a mutual fund of 90%. Which of the following corporate issues does an investor have the right to vote on as a common stockholder? So you don't vote on stock. I don't like this one. We don't vote on proposed stock splits. But again, I'll get backstage with Mometrics. Corporate bond issues, we don't vote on that. Election of the board of directors, we certainly do. So I would say C. Shop for DirecTV. I don't like this one. Common stockholders would vote on the board, not these other things. Uh, 64, all the following are true of stockholder methods. Except that. The statutory, so there's 2 types of voting, statutory and cumulative. Statutory is kind of boring. If I have 100 shares, I have 100 votes. Cumulative, I have 100 shares and there's 3 board seats, I have 300 votes. Again, this is not a lecture. This is a explication. You can watch my equity securities lecture. I highly recommend it. No surprise. The statutory method involves an investor voting equal amounts of his or her shares for each of the kind of candidates they'd like to vote for. So, man, the grammar here is atrocious. B, special circumstances may allow a voter to vote more than one vote per share for each share he wants. So B would be super voting. And you do get tests on super voting. That would be like founder shares where there's 100 votes per share. So that's not true of a normal statutory kind of stock. So I like B as my answer here. Cast all our votes for one candidate? Yes. There are two methods? Yes. So I'm taking B. I don't like the phraseology of this question, but I would know that be able to distinguish between those two types of voting. Again, I covered that in my equity lecture if you haven't already watched it. 65. Which of the line describes the rights shareholders possesses? So rights and privileges of being a shareholder. You're not going to get multiples on the test, but they retain an interest. Yeah, you have a residual claim. If we sell the assets, pay off the liabilities, you're last in line. That is true. You're the most junior security in liquidation. They can access a corporation's financial information that would otherwise be held as confidential. That too is, well, no, I don't like financial information. We get balance sheet, income statement, and statement of cash flow on the 10Qs, quarterly reports, and 10K. They receive a shareholder list. They can expect the corporation's books and records. Yeah, that's what I meant by getting that. So I don't particularly like this answer set, but given the answer set, it looks like our best choice here is B. What I would tell you on the exam is make sure that you know you have a right to vote on matters pertaining to the corporation. You have a residual claim as a common stockholder, right? So just those basics. Which of the following is not true regarding the options of an investor who possesses a warrant? You should definitely be able to contrast rights with warrants. Rights are short-term, exercisable below the current market price. Warrants are long-term and exercisable above the current market price. So the investor must exercise the warrant before the stock price rises above the subscription price. And that's just nonsensical. You can sell the warrant, yeah. You can exercise, yeah. So all the above statements are true. No, we just said A is not true, right? So 66, not true. You got to be careful on these not trues. I think a good memory aid device is T, 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 E, E. Traded, exercise, expire. That's what you can do with rights, warrants, or stocks. 67. Which of the following duties does a transfer agent not perform? Maintains a list of shareholders? Yes. Verifies the owner identity and stock issuance? Yeah, maybe I put a question mark. Verifies the validity and legality of a company's debt and a bond issue? No. And a muni bond, that would be called a legal meaning. Handle new issuance of stock certificates. Yeah, so given that answer set, our answer is C. Which of the following economic indicators? Well, finally, some economics questions. This has been so far pretty light on economics. Which of the following economic indicators would be classified as a leading economic indicator? I would definitely know that stock prices are a leading economic indicator where we're heading in the business cycle. And I would definitely know that 2 calendar quarters of declining GDP in the business cycle is a recession. Corporate profit and loss, no, that's what happened. That's lagging indicator, right? That's what took place in the last quarter. Permits to build houses that are going to be built, yes, is a leading indicator. Changes in borrowing, debt can fuel the business cycles. The answer is C. The other one I would know is a yield curve. The difference between, if the yield curve inverts and we have short-term rates that are higher than long-term rates, that too would be considered that. When considering a corporation's balance sheet, all the following are characterized as other assets except. Well, remember we said trademarks, patents, and goodwill go into a different category called intangibles. Again, way beyond the SIE, way beyond the SIE. I don't think you'll see anything like that. Which of the following terms represents simply the value of the company's countries produced goods and services? That is very much a test question. As I said, it's been light on economics. It looks like now they're taking care of that in their practice exam, and that's called gross domestic product, the total goods and services an economy produces. Uh, Disintermediation is the flow of money from one place to another. Consumer price index is used to measure inflation. It's a basket of goods and services in a particular city. Which of the following would be associated with the government's efforts to slow down the economy? So we said that's fiscal policy, very testable. Fiscal policy is government spending and taxation controlled by Congress and the president. Monetary policy is the money supply controlled by the Federal Reserve Board. So one, reduction in taxes says slow down. So if we reduce taxes, that would accelerate. Reduction in spending, yeah, right. If the government doesn't spend so much, two is true. Increase in taxes, yeah. 2 and 3. Okay. Uh, what is an order that enables a broker to have discretion regarding time and price? This is very much a test question. This is called a not held order. It's where I give my floor broker. The floor broker is the one who executes orders for clients of member firms. I say, you do it at whatever time and price you think is right. That does not, by the way, require discretionary authority from the customer as long as the action, whether to buy or sell, the asset, and the amount are present. The way to get that right is 3 A's. 73, an investor has sold short 275 shares. That's kind of weird. At stock at 26. The market currently has PPG at 11. Ooh, man, I'm looking really, really good. If I sold it short at 26, now it's 11. The investor sees news of the company that may indicate a price increase over the short term. Which of the following would provide this investor with guaranteed protection? Ooh, I don't like that word. Against missing the purchase at a level which he can still make a profit given the short position. Wow, what a long about way to get to the answer, which is a buy stop. So we're going to put in a buy stop and tell my broker if it trades at or through, a particular price, buy back the stock. So let's see, which of the following provides investors with guaranteed to still make a profit? So boy, the reason I'm going back is I have two choices on a buy stop, and it says that I'm going to guarantee to have a profit. I don't like the phraseology, but if I buy back the stock at 32, I got a loss, right? And so I'm going to have to buy it back at less than I originally sold it short at. I think kind of convoluted. I would know that stop orders, the number one use of a stop order on your SIE is to stop a loss. Here we're using it to protect a profit. When orders have the same price, what is the prioritization for executing each? I can't tell you how many times I've had clients who are watching the tape on CNBC go by. Oh, there's my order. I said, well, hard to believe there are people ahead of you, right? So, um, it's first come, first serve. So when orders have the same price, so two customers have put in a buy limit, for example, at the same price, and we're asking how are we going to break the tie? And the first tiebreaker is priority time, meaning who put in their order first. By the way, it looks like now I got the right answer from that alone because I know that it's whoever got there first, right? So I only have one that says time priority is first, right? And then precedence would mean quantity, and then parity means I can't be discriminatory about the order. So I think another one that I think is a little beyond the SIE, but oh well, oh well. Which of the following are considered to be actions falling under the role of a dealer? So remember, when we act in our broker agency capacity, we charge commissions. And on your behalf, customer behalf, we get the security elsewhere. And when we act in our dealer principal capacity, we charge you a markup or markdown. You're buying it from or selling it into our inventory based on our bid and an ask. So I would have a general understanding of this. So in our dealer capacity, we don't charge commissions. So I should have been able to eliminate one. By eliminating one, I got to take two. I should know when I act in my dealer principal capacity, I am trading out of my own account, my own inventory. Do I act as a market maker? Yeah, that's what that means. Market maker means I provide a market, I provide liquidity by buying and selling. May facilitate only the order execution for a customer. No, I trade with, everybody. So the answer here is D. Okay, well, I did bring that in. My goal was to bring that in under an hour, and it looks like I've accomplished that. And again, this is part of the my review process. Shout out again to Jordan Mometrics on their fourth edition of their SIE study guide, which includes 3 practice exams. I explicated their first one earlier in this. I would give this a score on this practice exam average. If you're doing this exam and maybe you're out of sequence, I put things in the playlist in the suggested watch order. But that being said, the best one for correlation of the actual exam is the TestGeek SIE practice exam. Definitely want to get that done. There's 2 Kaplan practice exams. There's one I wrote myself, which is a doppelganger. Well, not doppelganger, the opposite of a doppelganger, or the SIE one. You can watch me do the SIE one. And I think there's one more I'm missing. I'm working on being able to get Nopin to let me do another one. So there should be another one coming up shortly. Remember, inch by inch, your SIE is a cinch, yard by yard. Your SIE is hard, and I'll see you next time. Bye-bye.